Welcome to Retirement Perspectives with Bob Horne. If your retirement picture is blurry, Bob and the team at NuVenture Financial Group can help you put your retirement into focus. Bob strives to understand all of your financial needs to help guide you on the path to your retirement goals. This is Retirement Perspectives with Bob Horne.
Welcome to Retirement Perspectives with Bob Horne. I'm Danielle Martin. Today, joining me is Bob Horne. He's the founder of NuVenture Financial Group, located right here in Jacksonville. Now, estate planning is not something that many people put at the top of their to-do list, but it's something you can't avoid forever. So Bob explains how estate planning is something everyone might consider sooner rather than later. Bob, it's great to be back with you today. I'm super excited.
You as well. I am too. Thank you very much.
Now, this is a very prominent topic. We can't avoid estate planning, like I just mentioned, because many retirees, they think that it's something that they can just skip over, right? But estate planning is actually a part of an overall retirement plan. So let's start with this. When do you think is the best time to start this process?
So sooner than later. That's the simple answer, right? What I always recommend typically is when you begin having children, that's a good time to start looking at an estate plan. And the reason why is because if something happens to you, your assets will go to somebody, whether it be a spouse or your children, that kind of thing. So that's typically the first time you begin to start thinking about estate planning, is do it now when you start having kids. But as you progress and start getting to the retirement years, if you don't have that already, you really need to seek the advice of a retirement planner and an estate planning attorney and start getting it done now. What that'll do is it will help eliminate a lot of the emotional pain and suffering in the future if something happens to you. I often talk to clients, look, think about it. If you pass away, your kids are going to be dealing with enough with your losses. If you hand them this just tangle of all your assets, that's going to make it a bad situation that much worse. So get that stuff done now, not in the future.
And when it comes to estate planning, this is where a lot of families think that just waiting to the last minute is going to solve all the problems, when actually it's going to make things a little bit complicated. So if you can just talk about even too, when it comes to estate planning, how it's even a misnomer to say that estate planning is only for the ultra wealthy, right? But that's actually not the case.
It's really not. And so I often talk about certain elements of a estate plan that everyone needs. You need to have a will. If you're watching this show right now, you need to have a will. Everybody needs to have one. It just helps assets pass efficiently to the next generation. And the thing about it is, they don't have to be super expensive. A lot of times they're free or very reduced cost on the internet. So everybody needs a will. Also, I would also recommend getting some type of healthcare power of attorney. Danielle, if you're incapacitated, regardless of your age, if you're incapacitated, who's going to be able to make the healthcare decisions on your behalf? It's really important, and people don't think through that. And I have some spouses or some married couples will say, well, if something happens to me, my spouse will make the decision. Well, what happens if you're both in that car accident or you're both incapacitated? Then what happens? So I always recommend having a healthcare power of attorney as well.
There's some other things too that when it comes to estate planning, that many misconceptions are on married couples, right? Like many couples think that if a will is absent, then all assets and investments go to their spouse, but that's also not the case as well.
Not always. Typically, yes. Typically, if you were to die intestate, which is without a will, then your assets would go to your spouse in the state of Florida specifically. However, there's some nuances to that. And this happens quite often if your family dynamic is a little bit different. It's not just super traditional. And if you have children from a previous relationship and you pass away, believe it or not, if you die without a will, half of your assets go to your children of that previous marriage and only the other half to your current spouse. People have no idea about that. And maybe that's what they want to do. But if you have some kind of direction in your estate plan, you can make sure those assets go where you want them to go, when you want them to do it.
This is another significant piece when it comes to estate planning as well, Bob, because when it comes to assets and people thinking that they have parts of them, right? But let's kind of talk about what are some ways you can transfer assets when it comes to estate planning.
So estate planning is really important. Estate planning is not meant to necessarily disperse assets fairly or equitably, believe it or not. That's not what it's meant for. It's meant to disperse and allocate assets in a way that is conducive to your needs, what you wanted to happen, and be very efficient. That's the key, is being very efficient, not necessarily fair or equitable. And so what I always recommend is that you have a very poignant conversation with anybody involved in your estate that essentially is going to get some of your assets. Have a very good conversation, a very black and white conversation about what's going to happen. Spend time with your family explaining your rationale and your reasoning, which is why you should really start early. And then having a positive legacy, it's worth the work to do this and do it now. There's not a whole lot you're going to do in estate planning that will positively affect your life. But Danielle, believe me, I've dealt with this for a long time now. When you pass away, it will absolutely make the lives of the people that come beyond you so much better. And so I always recommend to seek the counsel of a good estate planning attorney to get these estate plans done.
Really good insights, Bob. I'm excited to continue this conversation right after the break. So leaving a positive legacy is the goal, but some people worry about how much it will cost them. Coming up next, Bob explains what you can expect to pay during retirement. Stay with us.
Planning for retirement can be complicated. Helping create income that lasts, making sure your health care is covered, investing while managing risk, and don't forget about taxes. If you're overwhelmed, you're not alone. The good news is we have what you need to give you confidence to start planning for your ideal retirement, all in one convenient resource. You'll get answers to some of your biggest retirement questions in this easy-to-understand, practical resource. And best of all, there's no cost to you. Take the first step toward a confident retirement and get yours today.
When it comes to planning for the future, time may not always be on your side. Think about your taxes. Tax rates are historically low right now, but they'll likely be higher in the future. Our current tax rates are set to expire in just a few short years. With the right planning and strategy, you might be able to cut your tax bill in the years to come. But don't wait until it's too late to take advantage of today's lower tax rates. Let us be your partner in planning for tomorrow so you can enjoy your retirement today.
Well, welcome back into Retirement Perspectives with Bob Horne. I'm Danielle Martin, here with Bob Horne, the founder of NuVenture Financial Group right here in Jacksonville. We're talking about estate planning and how it does not have to be expensive. So Bob, is there a cost-effective option for retirees when it comes to estate planning?
Yeah, there really is. So if you want to look at this, you can go onto the internet and get some really good estate planning advice on the internet. Now, there's some good stuff and bad stuff, but you can actually execute some of these documents for free. You can download some of those templates and do a basic estate or basic will and essentially a basic power of attorney free. You can also hire services on the internet to also do reduced cost estate planning. Now, all that being said, Danielle, I typically recommend working with a qualified estate planning attorney. Yes, it might be a little more expensive, but your basic estate planning, it might cost hundreds of dollars, not thousands of dollars. So it's not like it's a huge issue. And you can kind of ask questions to that attorney, making sure that exactly what you want to happen is what's going to happen. They can kind of keep you out of the weeds too as well.
Now, there's many options to keep in mind here as well. So let's also talk about why people procrastinate when it comes to estate planning. I know estate planning is not the most exciting thing to talk about. Plus, it involves like other family members, and sometimes it can kind of cause chaos because let's say one family member doesn't want to leave anything behind, right? Like we had a question earlier. It's like some parents are like, I don't want to leave anything to my kids, right? But it's important. It's a part of the overall retirement plan. So kind of talk about why do people procrastinate when it comes to this?
Have you ever had a root canal?
No.
You never have. I've had a few of them, all right? And let me tell you, most people don't like the root canals. Number one, because you're in pain. You don't like it.
Right.
And they can be expensive to fix. And so you try to avoid them to the very last minute. It's the same kind of thing with estate planning. So, people procrastinate because they don't want to talk about that stuff. It's kind of painful, if you will. And it's going to cost money. If you talk to an attorney, it's going to cost you at least a few $100s, maybe a few $1,000s, depending on how intricate it is. So a lot of people just procrastinate and kick the can down the road because, we'll take care of it tomorrow. Obviously, we don't recommend that. And so another thing is some family members want to avoid each other. Not every family is super tight. And so there's family members that you'll want to avoid or they want to avoid you, that kind of thing. So it's a really weird dynamic. Also, and this is the emotional aspect of it, death is not something that any of us really want to talk about. It's not very comforting. You're talking about estate planning, you're talking about efficiently leaving assets or your stuff to the next generation. A lot of people don't like talking about assets. It's really sticky to kind of deal with. So that's a lot of the reasons why people procrastinate doing their estate plan.
I know when it comes to estate planning as well, I think we want to also provide some clarity here about when is the best time to update your estate plan.
Now. There you go. Simple answer, right?
Simple, that's it.
Yeah, simple answer.
Right now.
So here in Jacksonville, we get a lot of retirees that come from up north or across the U.S. and they'll retire here. And they will have done their estate plan up north or somewhere else. And it's a good estate plan, but when they move here, they need to get it updated. You've changed to different states. Maybe your kids are older now. Maybe the house is paid off. There's a lot of different things that are going on. So if you think you might need to get your estate plan updated, that's your sign. If you're asking yourself the question, go ahead and seek out an attorney. Now, if you've worked with an attorney that's done that previously, a lot of times they'll update it for you for a very reduced cost, sometimes even free. So I would recommend seeking the advice. If you're working with a financial advisor or a retirement planner, ask them. They'll be able to kind of guide you a little bit. If you're working with a good one, they have many relationships with other estate planning attorneys. We've got a number of really good estate planning attorneys right here in the Jacksonville area that we can refer you to that do a really good job for the families that we work with. So speak with our retirement planner and then go speak to a qualified estate planner. Seek advice because you are not alone. There's a lot of people that are in that same situation that you are.
That's really good to know. And I know it seems obvious, right? But can you talk about really quickly, like what would happen if you don't update your estate plan?
Well, I mean, very simply, if you don't update it and you pass away or are incapacitated, things that you don't want to have happen may happen. Your assets may not go to the people that you wanted them to, or they may go in a different way, a different dynamic. A lot of times we'll have families that have 3 or 4 kids, and some of those kids are more financially astute than other ones. And for those parents, they say, well, look, for these 2 or 3 children, I don't mind if they got the money very quickly when I pass away. But for these 1 or 2 kids, they probably need to have some parameters, some handcuffs on them for a little bit. So maybe we give that money to them over time. So the cool thing with estate planning, and specifically a trust, is that it can disperse that money upon your wishes, the way you want it. So I always recommend working with an estate planning attorney to get that stuff done the way you want to get done.
Really good insights, Bob. Thank you so much for that. So coming up, Bob breaks down some retirement steps that you can't afford to overlook. That's next in Retirement in Focus. And still to come, Bob answers some of your questions. So stay with us. We'll be right back.
How does your future look in retirement? When you don't have a strategy, the future might look a little fuzzy. But with someone asking the right questions and helping you learn where you truly stand, it can become easier to work towards your goals. You need a plan to help generate income that will last as long as you need it. And the first step to creating an income plan is an analysis of where you are now. Let us help you bring your retirement into focus with your free income analysis today.
When it comes to planning for the future, time may not always be on your side. Think about your taxes. Tax rates are historically low right now, but they'll likely be higher in the future. Our current tax rates are set to expire in just a few short years. With the right planning and strategy, you might be able to cut your tax bill in the years to come. But don't wait until it's too late to take advantage of today's lower tax rates. Let us be your partner in planning for tomorrow so you can enjoy your retirement today.
Planning for retirement can be complicated. Helping create income that lasts, making sure your health care is covered, investing while managing risk, and don't forget about taxes. If you're overwhelmed, you're not alone. The good news is we have what you need to give you confidence to start planning for your ideal retirement, all in one convenient resource. You'll get answers to some of your biggest retirement questions in this easy-to-understand, practical resource. And best of all, there's no cost to you. Take the first step toward a confident retirement and get yours today.
In today's Retirement in Focus, Bob recaps the items to put on your estate planning checklist. Bob?
As always, thank you very much, Danielle. So in today's Retirement in Focus segment, we're going to talk about basics of legacy and estate planning and essentially having a checklist. And so there's a number of things that you want to be aware of. So maybe some hidden obstacles that you want to be aware of and address in the estate and legacy planning sector. So the very first thing I get a question a lot is, what happens, Bob, if we do nothing? Well, it's funny that there's not a whole lot in legacy and estate planning that's really going to positively or negatively impact your life, but it certainly will impact the lives of those that come beyond you. For instance, if you have to get an estate plan done at an attorney's office, it's going to cost you money. And a lot of times it's going to take a couple meetings, it's time, it's money, and it really doesn't do anything for you, but it absolutely does some very good things for the folks that come beyond you. So I always recommend working with an estate planning attorney to address those needs. Number two, make sure that if you are married specifically, that you have some jointly held accounts. A few years back, I had a client that came to me and essentially she was a homemaker and he was employed many years, and all the retirement assets were only his name. There was his 401k, which became only his IRA, an individual retirement account. Also at the bank, all the accounts were only in his name. So even after a number of years, me recommending, please put some of those bank assets in a jointly held account, they never did. A few years later, he actually ended up passing away, and it was very unfortunate because now she was the beneficiary on all those accounts, but she couldn't get to the money very quickly. She couldn't get to the IRAs very quickly, and all the money at the bank was not hers, it was his. And so it was a number of weeks before she had access to any of that money. So I always recommend people, specifically if you're married, make sure that both spouses have some jointly held assets for sure. The next thing is beneficiary designations. Now, life changes over time, and so you may change the percentages or even the entire beneficiaries on your accounts. You need to have a primary beneficiary and potentially a contingent or secondary beneficiary or beneficiaries on all of your accounts as well. Now, what will happen with this, if and when you pass away, all the accounts that have beneficiaries supersede probate, they supersede your trust, and they go straight to the people that need the money that you wanted to go for. It totally avoids any kind of estate. And so we always recommend not only putting beneficiaries in all your accounts, but check on them throughout the years, because again, life will change. Actually, I had another situation recently where I brought a client into our firm, and when we brought his accounts over to us, we found out that the other financial advisor didn't even have beneficiaries on the accounts, and he was super surprised. So this is something that we check on annually when we do our annual strategy and tactical meetings. The next thing you want to look at is a will or probate. So we often get these questions in a lot of the workshops that we do. Somebody will raise their hand and say, Bob, so who needs a will? And my simple answer is everyone needs a will. Regardless of your income or your lifestyle or your savings, you need to have a will because it's your direction on what you want to have happen with all of your stuff. Don't let a judge or somebody else dictate what happens to your stuff. You want to have a will. Now, one of the fallacies that a lot of people think is that if you put money or you direct through a will, that it avoids probate. That is not the case. Your assets and everything will still go through probate, but the will is a very efficient tool. You've written out exactly what you want to have happen, and so it's a very efficient process, a lot more efficient than it would be if you did not have a will and you died intestate. Then you talk about a power of attorney. So specifically a financial power of attorney. So think about if you get in a car accident or you're incapacitated, who is going to make the financial decisions on your behalf? If you can't talk, who makes those financial decisions? So having a financial power of attorney in place, what they call a durable power of attorney, is sometimes a very, very good idea. Also having a living will or a trust. A living will, who makes medical decisions on your behalf if you're incapacitated? That's where a living will comes in. And then a trust. If there's a certain family dynamic or you want your money to do certain things beyond when you pass, you want to make sure you look at having potentially a revocable trust. That will direct the money where you want it to go. And then the last thing is putting it all together. So we want to talk to you about working with a retirement planner that understands these concepts. Now, like I said before, I'm not an attorney, I'm a retirement planner, but we know a lot of different qualified estate planning attorneys and elder law attorneys that are in the Jacksonville area that do a very good job. we can speak the language and we can talk through those things, but ultimately work with a retirement planner that has a lot of different relationships with other professionals, estate planning attorneys and a retirement planning attorney that can send you there if you need that help. So with that being said, I hope you got some really good value out of our segment today. Danielle, back to you.
Thanks, Bob. And still to come, we'll hear directly from you in our Q&A section. Retirement Perspectives with Bob Horne continues right after this. Stay with us.
When it comes to planning for the future, time may not always be on your side. Think about your taxes. Tax rates are historically low right now, but they'll likely be higher in the future. Our current tax rates are set to expire in just a few short years. With the right planning and strategy, you might be able to cut your tax bill in the years to come. But don't wait until it's too late to take advantage of today's lower tax rates. Let us be your partner in planning for tomorrow so you can enjoy your retirement today.
How does your future look in retirement? When you don't have a strategy, the future might look a little fuzzy. But with someone asking the right questions and helping you learn where you truly stand, it can become easier to work towards your goals. You need a plan to help generate income that will last as long as you need it. And the first step to creating an income plan is an analysis of where you are now. Let us help you bring your retirement into focus with your free income analysis today.
Well, welcome back into the show. It's time to get to some of your questions that you have for Bob today. Bob, are you ready to get started?
I am, again, my favorite time to be on to do this, so I love these questions.
I'm excited. Okay, let's see. Our first question comes from Jim in Mandarin. He says that I'm 65 years old. I wrote my will when I was 50, and there's nothing in my will that I want to change. Do I still need to update it? Really good question.
Yeah, so simply stated, not necessarily. There may be nothing in that will that you need to change. However, it's been 15 or 20 years, and so I would actually recommend going in and talking to an estate planning attorney. Now, what they're gonna do is they're trained to ask a lot of different questions, things that you may not be thinking of as you've progressed through retirement. Maybe things have changed. And so that estate planning attorney will ask you those questions, kind of spur those conversations, and maybe change your mind that maybe there are some things you wanna look at that may be different than you were before.
So even if you don't want to update anything or change it, it's still best to talk with someone.
If it's been 15, 20 years, yes, I would recommend it. For sure, for sure.
All right, good insights there. Next question comes from Ryan in Nocatee. He says that I'm 63 years old and my wife is 65 years old. I have a son and she has a daughter, and then we have 3 children together. We all agree to split our legacy among all of our 5 children in equal ways. What's the best way to plan for this?
Okay, so this can be simple, but can also be complex. Is that clear?
Right, yeah.
All right, so the simple way, if you want all of your assets to go to your 5 children equally, a really simple way to do that is to split them up as contingent beneficiaries on all of your investments and all your accounts, 20% each way, okay? And so what's gonna happen is, if you put them on as a beneficiary, that will supersede probate. And it will go directly to those children or whoever else you want on there. In a pretty time efficient manner, usually a month or two, those assets are dispersed. That's the simple answer. Now, a little more complex though, what we often find is that of those 5 children, there's a certain family dynamic. Yep. We talked about this earlier today, in that maybe you want the children to receive those assets differently or in different ways. I have a trust personally for my 4 daughters to dictate how and when they get the money and certain things they accomplish in their lifetime to get the money if I pass away, me and my wife pass away. And so it's a family dynamic. I want my children to get all of the money that I have saved up my entire life for, but I've got a 7-year-old right now. So I don't necessarily want her to get all this money when she's 18 years old, right? And so that's where a trust comes in. You make the contingent beneficiary of the trust. The assets flow to the trust, and then the trust then dictates to your wishes to where the money should go, when it should go there, and the percentages.
That makes sense. I love how clearly you explain that. Sounds like you have a lot of options, which is why talking to someone professional will be very good in this case.
Absolutely.
Great insights there. Okay, let's get to our next question from Bill in Rivertown. He says that if I don't plan to leave a large inheritance to my kids, what are some options for charitable giving that I can consider for my legacy plan?
So this is an interesting topic, and actually a question that a lot of folks don't ask is, I want to really take all the assets that I have and for the most part, give it to a nonprofit, to church or whatever else. And so there's a number of different ways that you can do this. A very simple thing, we talked a minute ago about changing beneficiaries. You can very simply change the beneficiaries on your accounts or your life insurance or whatever you've got to the actual nonprofit, the 501c3. Change it directly to them. And then when you pass away, it's going to go very quickly to that nonprofit. There's other things that we can do too. Life insurance you can take a little bit of money now on a life insurance policy, and when you pass away, that little bit of money you've paid in premiums becomes a lot larger amount to the nonprofit. So it's a very good way of leveraging the money that you have in retirement, paying some small premiums now, so you know that not if you pass away, but when you pass away, that the money's going to be a much larger capacity for that nonprofit. And then the last thing we do a lot of at our office is something called QCDs, Qualified Charitable Distributions. When you turn 73 years old, you're going to need to start turning on required distributions. Well, there's some really cool things that you can do with some tax leverage where you can actually transfer money to a nonprofit in a very efficient manner and also get the tax benefits for it. Now, most people are not giving money to charities because they get a tax benefit for it. But hey, if you're going to do it, it doesn't hurt.
I know a lot of retirees have questions about this, Bob, so I think the best thing is definitely give Bob and his team a call to make sure they walk you through this correctly.
Absolutely.
Really good insights, Bob. Thank you so much for that. Okay, last question comes from Lauren Pontevedra. She says that my dad died at the age of 67 and he didn't leave a will. My mom is 70 and is in senior living and can barely communicate with me. My dad told me that he wanted all of his 4 children, including me, to be taken care of, but I don't know how to go about his finances when there is no will.
Yeah, so this is an unfortunate circumstance, and I've seen this a number of times before. Fortunately, having done this so long, we have some really good connections with some elder law attorneys, and they can do some wonderful things for people in your situation as well. So just like we talk about leaning on estate planning attorneys to do what they do, there's also elder law attorneys that can really help these conversations, and they are trained to guide you through these very difficult situations when it becomes situational incapacity or somebody's in a long-term care facility, nursing home, that kind of thing. They're trained in those complex situations. So I would definitely recommend seeking out the advice of a elder law attorney.
Bob, I know when it comes to estate planning, it can be very complicated, so I definitely appreciate your insights today. Like we mentioned before earlier in the show, if you have questions about this, don't hesitate to call. And if you have a question, submit it. We might just answer it on a future show. And if you want to know ways on how to generate lifetime income, reduce your tax bill, and maintain your lifestyle in retirement, reach out now to start planning for your ideal retirement. For Bob and the team at NuVenture Financial Group, I'm Danielle Martin, wishing you a healthy and happy journey to and through retirement. Have a great day.